dancing in nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the charts, shall we? Bada bing, bada boom, here we go. Alright, so we've broken obviously out of this and off of that and are coming down into some daily close regions. These are daily close candle regions in yellow here to notably check out. We wicked up to this region, which was this daily close here and these two here. These resistance points are a key resistance zone that we need to get above if we want to see higher prices. Otherwise, a retrace into lower time frame support could be in order. So we had previously closed above this first support resistance region, now flipping to support here. This bounce off this, and currently on the idea of holding this level or not, which is the next step on that reclaiming of these previous resistance support turn to resistance levels. So this is just looking at the picture of coming towards the weekly candle close. We'll get into analyzing the candles and the daily and whatnot in a minute. First and foremost, let's get into the liquidity of the heat map of high block. What is that? Well, that's when people leave their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss, and then the market maker reclaims their money. So we can see where that liquidation point is, and based off imbalances tell where it wants to go. It's such a shame all that nice $20 billion juiciness below has been lost in the ether of time, so we cannot see what existed below. But if you were watching yesterday and the day before and the day before that, you would know how many imbalances exist below, and we have marked them off in the charts for those 100x characters are most likely still open because people don't pay themselves and have these hopium ideas for 40k and whatnot. So the chance of coming back into those regions is not off the table. But just looking off the immediate of what is available currently, you can see that these guys, 204 million, that was taken out, but down here 204 million to the 121 million above, this is winning the tug of war to the downside here. And if you go to other times where inducement has been had, this was also a point where you had 368 million in longs and 225 in shorts. So there's a clear interest in longing as opposed to shorting, as the shorts got wrecked. So there's a fatigue on the shorts. If you look at this again here, these bubbles also suggest 278 million in longs, 130 in shorts. There's just more people longing at this time. I think the funding rates are negative to shorts as well, so there's this clear bias to longs right here. If you just compare these bubbles, this 225 to this 368 down here, it clearly shows that the potential to come grab this character at $368 million at 29,222 is not out of the cards just yet. You have all of this thick juiciness down below as well. So even if you were to go to the upside, just going down and tapping in and eating up some of this liquidity on the longs first would be the smart play to do if you were a market maker. This is just me spitballing after doing this for how long has it been now? A couple months, day after day after day, looking at the liquidity. So you do have short liquidity up above here, let's not forget that. And the idea of longing in this low liquidity weekend is very sparse, as you see here. So when you consider longing and shorting during the weekend, realize that you're a small fish in a very sparse pool that can be easily targeted, similar to this 32 million that they just came up and grabbed here, and the 85 million they grabbed here, and the 50 million they grabbed here. So all of the sideways action consolidation of the weekend is just them getting these little mini pools of people with too much time to trade on the weekends when it's not the best liquidity to do so. But if you're expert at scalping, by all means consider doing that as much as you like. Here, this 85 million in short liquidity opened up down here at the bottom, so they could be coming back to stop out some shorts before dropping down below. There is a thick band up here at 30,008, but not really impressed with it as much as I am impressed with what's down here at 25x 278 million in this long volume noodle. I like to use the analogy of noodles and ramen and hunger because everyone gets hungry, so you can relate to whether you want to drink soup. More soup is down below, there's just broth here, but there are some noodles up here, so coming up to this region at 30,450 might be the the play here where they come up to here and then possibly come back down to eat the noodles down below. So you just compare the black line, which is above my head, and that's the current price, and then you see how much liquidity is beneath us and above us, and how much of it is stacked, and what the length of the noodles are for this, and whether it considers slurping one. Let's go load the higher time frame, shall we? Let's skip the 12-hour. I'm not really a fan. So that 31.3 region, 2-3 region is getting a couple billions up there, but overall in the immediate, the journey to push up to grab this has to pay all of these bands down below. So even though these bands down below are less in billions than this single band at 31.3 at $5 billion, you can easily negate that by 2.5 and 2.8 right here at 29.8 to 850. That already negates this 31.3 amount. So it's all about imbalance, and so even though the heat and the color at 31.3 is hotter here on the 7-day, there is just simply more down below here, and we've previously forgotten that on the 1 minute, but you saw all those 100x bubbles if you've been watching. So that's all of these guys here. They've now been turned into these little green liquidity pools at various 150 and 25x values, so they could come back into this region just as easily as they could push up to grab this. Let's go ahead and take a look. Also, you're building some pools down below here, sub 28 at 27,250 and below. Let's go to the higher time frame of the monthly. We're going to try to keep this short but sweet, and as we lead into the weekly candle close, starting to get some liquidity up above on the monthly. Quite interesting. You're getting some short liquidity up in the 15 double digits regions, all the way leading the path to 34k. Previously was threadbare, so you're starting to get this path after 32k up to 34k present itself. We previously ate the liquidity up here, and we're chilling out after the pause of absorbing that liquidation event. And you're seeing, let's just zoom in, shall we? Let's just get a little bit closer. So you have 2 billion, so you have 1 billion up here, 2 billion at 30,700, and just immediately down here at 29.8 you have more down below than above if you're just going off of what's nearest the price action on this time frame. Sometimes I've noticed by back testing that if you just zoom into what's nearest, whoa, sorry about that, if you just zoom into what's nearest here, why is it doing that? You can kind of see what's on the menu in the immediate interim, and you got about 5 billion here, and then you got about 10 billion here. So if they go up to here, they get that. If they go down here, they get that, and it just seems like there's more down here in the monthly time frame, disregarding all of this stuff. But in the longer term picture, you do have a lot more stacking up below 25k and 22k. We've talked about this day in and day out on these pools. As we go higher, you'll see it again. And you'll see that we are getting a heat signature of hundreds of billions at 22.5 and 25k, and the happy campers below 19.4 of 300 billion last week calculated. So you got this is the telling thing for me personally. If you look at this, yes, sure, you have a lot of path to the upside here. You got 14 billion at 32.6, 18 billion at 32.8, 27 billion nearing 28 billion at 33 even, 24 billion at 33.2, near 40 billion at 33.4, 28 billion, near 29 billion at 33.6, 24 billion at 33.8, and 16 billion at 34 even. While it's amazing that these paths are being paved to the upside, that is a mighty hop, skip, and a jump above. That is quite high from where we're at currently. And where we are at currently, you have that 31.2 region we were talking about the last few days. Are they going to come back to get this $37 billion? They don't always clear everything from what I've noticed. So if we go to a yearly time frame, I'll show you that. So they do sometimes let pools percolate, as they did here. They left 31 billion on the table and came back and retraced heavily while they let this band of shorts expand. So are they going to do that here? If you just look at the sheer number of heat signatures below to heat signatures above, it suggests that it will start to Bart Simpson down to get some of this, to build a stronger narrative to make the juiciness justified. Because you have to realize that every time they push up to this region, they are paying every single one of these guys, and every single one of these guys has a target, and they have a place where they want to sell their long. And if they give the idea that it is bullish, then they leave their money on the table for them to come back into. So it's a game of cat and mouse, and they don't want to scare away them closing out their position. They want to eat up their profits and come back to them as soon as possible without having to pay them. So the guys they realize they could have closed it here and not gotten greedy. And so the idea of not taking these pool also has to be thought of. Why would they do that? Well, they're trying to give the enticement of these guys wanting to close out their longs in a juicy level to not allow that to occur. So they get them right on the cusp of where they would want to close, and that's why you should be conservative in where you take your profits. You don't always need to reach the exact target. And so the people that are waiting for the exact target may not actually get there, and then they come back and eat some of their liquidity and then go to their target after they scared them out or got them to close at a less profitable level, and then they win in the end. So it's all about, thinking about where the game theory of the market maker would take us. And this suggests on this time frame of 3 months that there is a large amount below as opposed to above. Let's go into the 6 month and expand our vision to the time frame of 6 months. How's everyone doing out there? Booyah. So they previously cleared it on this time frame. I guess they closed out that 47 billion at 31.2 because it was at 80% of their margin call or whatever. So this too also suggesting a large amount below, as you see on the 13.5 level, 86 billion that are getting paid down here. That's getting mighty thick since the drop down in November. We've been expanding this region down below. 86 billion, you got 65 billion. This entire region below 20k is just filled with liquidity, all getting paid. They're all in profit. So if they get them to a level where they can take their profit, then they have to pay them. So if they give the idea of the bullishness and come back down into these regions and start eating up some of these liquidity pools, if we just go sheerly off of this, you got 14 billion at 31.5, and you got 14 billion down here at 29.7. So on the yearly time frame, this nearby pool at 29.7 is just simply nearer to the price action currently, as opposed to having to go all the way up to 31.5 to get 14 billion. You could just go down a little bit and get 14 billion, then a little bit more to get 15 billion, and a little bit more to get 22 billion, and a little bit more to get 12 billion. So this yearly time frame is suggesting a retrace down to the 28.8 region. Just off of that alone, you have 30, 50, $62 billion to take back in this region. So if you were to go up in the same fashion, you would only take about 30 billion, so you'd take about half that. So if I were the market maker, I would just go down and Bart Simpson and take all of this. Period. End of story. No questions asked. And that is setting you up for just a hop, skip, and a jump from taking these guys too. There's just simply not as much above as there is below on this time frame. The 6 month agrees with the 3 month, in my opinion. And that's just looking at this every day. I'm not a financial advisor. Nothing I should say or do should be taken as such. Do your own due diligence and all that jazz. So as you see above here, we got 30 on the yearly time frame. As we step back even further, you can see these pools from June of last year. You see that this is 84 billion dangling above the price to be sucked up to, $84 billion at 34.8. And the narrative to go there is being paved by other short pools, 68 billion, 85 billion, 86 billion, 59 billion, 65 billion, and so on and so forth up to there, pretty much getting paved on each level up, double digits in the nearing the 50 billion per level, which is interesting to note. They could thicken it up a bit as they did here. If we go back to this for reference, you can see that they had 150 billion up here at 23.2 not too long ago, and they could have just came up and got it. Why didn't they? Well, they wanted they had a thicker, juicier bar down below at 17k, so they came down and grabbed that with fury and let these develop over time. So we don't have the same fury. A lot of people were liquidated down here, so we don't have the same liquidity interest, just in crypto with Sam Bankman-Fried and the world state of affairs. There's just not as much liquidity as there was back here. The idea of the double bottom juked out a lot of people. Didn't juke out us though. We had those rocket ships printing on Momentum Master, bada bing bada boom. And if we look at the upside here, we have the narrative to go up to 31.6 for 34 billion, down below 45 billion at 29.2. So even this agrees that the downside is in order to get this liquidity at least to go and juice up the levels to shoot up. So that what they do is they did this before, it had 140 billion, 160 billion up here. And I remember saying, as we retraced down into these regions and we were going to that 618 bounce, I was like, there's no way they're leaving this to not be taken at 25.6. I was like, there's no way. I didn't know how and when and where they were going to reverse back, and they reversed back at that Silicon Valley Bank liquidation event because nobody was willing to go long, and they were like, great, perfect timing, and they just went back and ate all those shorts and they let it stack up. So there's nothing wrong with the market maker letting some guys survive and stack up the liquidity for them to take in the future. There's nothing stopping them from just shooting it up and grabbing it later. It's all a game of traps. Prince of Persia. You stay on the platform for too long, it wobbles and drops to the spikes on either side. So you have to really know when to pivot and when to think about narrative shifting to one side or the next. So they have this narrative forming to continue to 34.8. I'm not going to deny it, but the narrative is also filled with juiciness below that people are refusing to pay themselves on. So that becomes a dead weight to their direction they hope for, if you will. So these 200 billion down below and all the other hundreds of billions here start to become weights. And if you compare just what's above to what's below, there's a thicker yellow band here, and I don't see any yellow band up here. So just overall in general, we reached a target. We reclaimed some of the support levels. We got whipped off resistance over here. We reclaimed a lot of the liquidity. A handle of a cup and handle is in order, just based off of technical analysis and the liquidity alone. So now we'll go back to the 6 month or 3 month. I like the 6 month right now. Let's leave it at that because it shows that clearing completely and just a little bit above and a lot below. So a retrace idea on that time frame is nice to look at. So let's go to the other charts, shall we? let's close that out. So the same rules apply here. We have the daily close. I only like using support and resistance at daily places. So we had this bounce, breakthrough, and this level where we closed the daily at. And it also happened to coincide with where we closed here. So we're trying to reclaim that. We wicked up to this level and we closed beneath this daily level here. So we tried to reclaim at this daily support, we're unable to, and then we closed beneath this daily support. So this could technically be considered resistance still. So you could change this to resistance, and this could be potential support. You never know. But until we break that purple level, these two blue lines could be resistance for the meantime to break through on the daily time frame. So lest we forget, these guys down here are those 100x bubbles that we'd like to see them reclaim down to the 618 region. And we already talked about this narrative yesterday. Coming down to this pocket is a healthy retrace idea if you were going to continue anyway. So going down to that region, could you see some shenanigans where you go up to here and take out that 37 billion before coming back down? Nothing is impossible. So let's go ahead, and I think the fib levels are still good. I'm not going to add anything else. Let's just go right into the Momentum Master. What is Momentum Master? Link in the description. You can find out more. It's momentummaster.info. Open it up, scroll down to features, toggle all of the heads-up displays you like for each individual component, and read at your leisure. Alright, so we were talking back here about how we were getting rejected off the adaptive moving average. We broke through it and we reclaimed it, turned it into a bullish manner. The adaptive also happens to be at the key levels, so coming back to test the adaptive for support is not out of the question on the daily time frame. We also have the ATR in our favor, so there's a lot more bullishness that can still be had by having a retrace. It's healthy to retrace and knock out some of the 100x people who are getting overpaid for their trades. It's not a bad thing. So you're also getting the baselines above the price action, which is showing a sign of fatigue. What are the baselines? Go to the baselines on the website, read about it. It's a first sign of reversal. We talked about the 6 hour and the 8 hour, I believe, closing cross down events. I added a Helix alert system you can do for that on a certain time frame. So we got this cross down event. The baselines are above the price here on the 8 hour. So the 8 hour could be seeing some suppression here with the Williams kind of holding this down, and this has happened before. Over here you had a oversold status, right? Good place to long, right? It's oversold on the stochastic RSI, but we go up and dump even further down. Why do we do that? The Williams is just getting ready to open up a floodgate of downside momentum, which is why the Williams is juxtaposed with the stochastic RSI to give you that idea of if this opens up the floodgate, this suppression to the 8 hour could occur. So the 8 hour cross down event, we had previous bearish divergence crystals on the money flow and the RSI play out. The baselines are crossing nicely above the price. You are getting buyback wicks right now, but once again we're in low liquidity. They're just chip chopping, whacking the price up and down to get those small pools we just showed you. And the 12 hour is closing around the daily close as well. Right now we're getting a cross down event on the daily time, the 12 hour time frame, and the 12 hour time frame just getting started in terms of downward momentum. Could you bounce off the 50 here and start curving up? If you see some lower time frame 6-8 hour plays, that could be a possibility. If the 12 hour closes with this cross down event intact, then you could see this be the beginning of that pullback we were talking about. Here's where you saw that before a leading moving average. Why is it leading? Well, the math makes it faster than other moving averages, which gives you that leading idea. So you got this right here before we started to see the downside, and sure enough, later, just 2 12-hour candles later, you had the stop hunt rise drop. Whoops. Stop hunt rise drop. What is that? A 9% drop. And then also overall you had another one that pulled back even further before continuing to the upside. So they give you those ideas of fatigue, first sign of reversal, hence leading moving average. So seeing this close in this state with the cross down event on the 12-hour at the top of the Keltner channel, an ATR based Bollinger Band type idea, we've been kind of oscillating on the upper bands of this, and it could just come down to kiss that cloud on the 12-hour as it likes to do. Cloud thins, we didn't expand to the downside, we expanded to the upside, and a kiss back to the cloud also coincides nicely with the liquidity and the 706 region. This is just the smart idea for me to come back down to this region. Still unchanged about that since yesterday. And actually for a long time, because it's just the liquidity pools that are still down here left open, hoping for 35 and 40k and so on and so forth. So these 6-hour time frames, let's take a look at that. So the 6-hour time frame is dumping out the Williams momentum to the downside, so you could see this meandering or you could see it take off. You have seen these things where it meanders or it goes up slightly but then dumps furiously because the Williams is just getting started. This is why you like to see them in tandem. When they're both low, you get these nice little opportunities, as we saw here last Sunday. So the Williams was also low with the 6-hour, and you saw that rise to the upside. 6-hour closes in 2 hours. Knowing when your candles close and how much stochastic probability they give back is something to notice on your charts. It will help you understand stochastics and probabilities better, in my humble opinion. So we just had a 4-hour close. Let's see how that played out. So we had a little bit of momentum increase based off these 2 green candles. That gave the probability a little bit of a boost here. But we've been seeing a row of chords in terms of like railroad tracks. They gave it back as well, so it contracted and expanded, but we didn't really go anywhere. So if we start to see this kind of go up but not really give much, it could give the idea to induce more longs but then get rejected on the 50 level as it does here. That is just one idea, because the Williams is still coming down and hasn't shown signs of abating just yet. Okay. So the one thing to note outside of Momentum Master B is the cloud here on the 4-hour. This is where we are getting our hesitation on the cloud. It's starting to thin as a result of that hesitation. And so we could thin on the surface of the cloud as it starts to curve out here. And then we could break through and bearishly retest and continue lower. Let's find examples of that. Similar to here, well, this is not the most perfect idea, but it starts to curve as you try to find support on it. Let's go to a better example, shall we? Here we go. So it starts to curve, you start to try to find some support as it's thinning and everything, and then you break down, you bearishly retest, and boom, you fall down. This is a perfect example actually. So you see the cloud thick, we bounce off the cloud and the ATR levels, which these are all back tested levels. It's not random. I didn't just throw them on this indicator suite to make it look cool. It's actually very clear ideas that hold true. So even if you don't know much about Fibonacci and stuff like that, it does keep you in the loop, so to speak, for where I think key levels are. It's dynamic support and resistance, and so it bounced off the cloud, came back, tried to do it again for another 8-12 hours here on February and then broke down and then came back after it got near the adaptive and the outskirts of the Keltner channel and came back to bearishly retest that thinning cloud and said nope, and then just went back down. So this type of thing is like a pattern, and if you back test it and you go through replay mode, you can kind of see this happen again and again, this whole thinning out process. This is why the trend cloud says is a volume weighted cloud formula, which expands and thins according to the amount of volume present in the asset. So it's quite a fascinating thing. So as we see this start to thin up here and curve in the same manner, and then we possibly break down out of that and then bearishly retest it and come down, that could be a possibility. Okay, just to think about. So you're getting a 3, previously on this candle close you got a 3 time frames oversold. You would have gotten an alert to your phone using our dynamic alert system. Quite nice system that notifies you when these things occur. So you could have considered entering a short there if it was at a key level you liked. And you're getting the hourly 15, and that previously the 5-minute was overbought. So those 3 time frames are telling you, hey, what, you want to do something? You want to see the hourly reset? You want to scalp that? And it would give you that option. So even though the 4 hours trying to stave off the hourly dump right now, the Williams is still coming down on you with the 4 hour and above. So let's go to the hourly time frame. Got this rounded out price action to the making high resistance to the upside right now, and you get the cloud kind of coming down, attempt to stab through it here as it thins. Currently unable to do that, and the hourly time frame is getting overbought multiple times. We've already ascertained that this whole wick whacking of the price is just to get those small low liquidity weekend players and those pools that just leave it in too soon. Okay, so getting overbought. One thing to note is when you go sideways and you get overbought, it's kind of a bearish tone. So if you reset the hourly in a manner, that could bring it down on you. So the Williams is also coming up too. You're running out of room to play around here with the stochastic. As the Williams rises and we go sideways, this also becomes a potentiality for that dump. And this is why these alarming events are alarming. You see that cross down? See how it's all fractal in nature? You get the baselines above the price, the cross down event, leading average. It gave it to you 3-4 hours before it happened with the alarming event, and you could have just taken this to the downside if you weren't buying into all the hopium of more upside, and you could have taken that nice sweet scalp down to the downside. So are we going to see this kind of rise up in the next 53 minutes and get more overbought without going anywhere above this cloud? If you have Momentum Master, you'll be able to check it out and keep up to date on that. Whether it stays above this cloud, can it spike up and reclaim it and kiss it before continuing higher, is the next question. The 15-minute and the hourly suggest you're going to dump to the downside from this point. 15-minute previously had bullish divergence off the 100x they liquidated on the money flow and the RSI. You had the rising sun, it played out, and if you were a scalper, you could have taken this for a keen 0.5% with some leverage upgrades, and you could have now considered with this alert, you would have got to your phone to enter the shorts. So are we going to see a break of this range down to the other liquidity pools below, down in these nether regions of 29.63 and 29.222 and the other areas I marked? Well, we have forgotten those 20 billion in imbalance of longs to father time, but it's still imbalanced as of this moment of 1.6 billion to the downside, and the other pools suggest on a lot of time frames, including the highest, that the 29k region is the point to go to after clearing some of these longs or shorts, the over leveraged shorts above these guys at 36. Do they have the steam to go up and grab them? Maybe not. It depends on how many over leveraged guys are down here. They may just fizzle out and drop. All right, so I think we did that justice for now. We'll see how the weekly candle close treats us. So I still can see a pullback in order. You got your shoulder head, and if it drops down like a shoulder, maybe this could be the one big head and then it tries to make a shoulder and it goes down more. I don't know. It's attempting to make a bull flag of some symmetrical triangle of some kind, but definitely not an area of interest for me personally for longing. Coming down to one of the nether regions and knocking out some liquid, having a liquidation event. Consolidation is not a fun place to enter. You wait for the liquidity grab and consider your position based off that. Just my humble idea of how I do it. So yeah, I think we got it in a good spot. Yesterday we saw, last week we saw this oversold status on 5 time frames. That was your key point to consider entering that long. I didn't take it personally. I was waiting for a stop loss hunt, which never occurred, which was unfortunate, but you can't win them all. But the indicator seems to. Anyway, let's see what's going on. Hey, what's up, Snowman? Thanks for stopping on in. Alright, so I think we got it pretty much on point. The thing to look out for is the 4-hour play staving off the hourly dump. But as we said before, the 4 hours cloud is starting to thin, so this could get overbought without going anywhere and suggests that the 6-hour Williams may dump continuously on you, suppressing the 6-hour from taking off and giving the 4-hour some love, as is the 8-hour, which is just now starting to cross, and you got that confirmation of the cross down event on the 8-hour as well. The 12-hour also getting that alarm, and the cross down event. So if this basically closes with that confirmed, we could see something similar to what we saw 12 hours later from that point. We did see a rise, but then it eventually dropped lower and continued lower. So these cross down events are not to be ignored. So we're getting that on the 12 hour. So we got that on the 12, the 8, the 6. Yeah, so the 4-hour play to me right now is not the play to think about. It's to think about the retrace, because the 22 is also coming down. My treasure 22, you haven't gotten the alarm just yet, but if this goes below a certain range, you'll get the cross down event confirmed for this, as well as an alarm, which could bring a furious dump with it down to the cloud kiss zone. We had that before here and it took some time to play out. And that's about it. I like how we can just go over BTC and be done with it. It's a nice short but sweet thing. If you have anything you'd like me to look at while you have me, I'm happy to do 1 or 2 things and then bid you adieu. Do you have anything you'd like me to look at? Seeing that cloud rejection. Anything? Whoa, 7 concurrent viewers. Thanks for stopping on in, ladies and gents. So are we starting to get that 15-minute dumperoo? Let's see. What's the liquidity like? Let's refresh it and have a sip of coffee. It's a midnight stream my time, actually 1 a.m. my time. How y'all doing out there? I had to do some funeral stuff again. In Japan, they're Buddhist, so they do this like 49 days after kind of party remembrance thing. But yeah, that was interesting. But let's see. So you got the previous 50 million. Nothing really changed here. I mean, the pool, the small little pools up above, they may remain unscathed if it's just it remains in this small level. Just off the interim, they could come up to that region at 30,450. But it depends on how much they're paying down below here. They have these 50 million bubbles that open, which basically offset those two bubbles here. This one bubble here offsets that. So you look at what offsets it, and if it offsets those, then they may not even just go there. Just try to scare them out of their trade. So let's see what you guys are into. BTC dominance. Good call. Let's look at the BTCD. What did we had some previous thing out for it. Hold up. Let's go to the daily time frame. All right. So we had previously seen a kind of nuke up here, I believe, when we looked at it last, and we were projecting some sort of reset of that region. So let's go ahead and pull this fib all the way to the top here. So you're getting the dominance pulling back as they let the alts play game. So the dominance kind of reflects, obviously, how much Bitcoin steals the show, if you will. So the stealing of the show for Bitcoin has been kind of prominent since well before the Sam Bankman-Fried and FTX collapse and everything. But altcoins have just taken a hit in general since Luna, really. And in terms of like mass appeal, of course, there's people that trade alts all the time, but that's why the dominance is kind of remaining in this 48 region. I think we're not necessarily have any interesting news to indicate the alts being able to play ball. So if this does come down, then that means the alts get to see a little bit of a rally. ETH has done a run to the upside too, which has caused this to drop a little bit. So if we look at the daily time frame, we're getting reset. The Williams is coming down some more, so we could see this come down. I don't know how accurate this is on dominance. I know you can trade dominance. I've seen that be tradable. So in terms of the dominance of Bitcoin, let me start with the 5-day here. So you're getting an alarm cross on the 3-day with this cross down event potential. We had that kind of come back down here, or at least come back down here, come back down here, come back down here. So every cross down event did kind of play out in some way, shape, or form, and that was confirmed. So we are seeing a cross down event confirmed on the 3-day. You're at the outskirts of the Keltner channel. We previously tried to get powered off of the outskirts, which does occur, but for the most part, when you're on the outskirts of the upper side of the Keltner channel, you want to come back down to the bottom of the Keltner channel, which would put you down in here. But that's quite a retrace event, so as things go up, it would probably put you in that golden pocket region. We can remove this. I don't like it there. So just off the 3-day alone, a cross down event after the previous nuke is showing a chill out for the dominance to come back a little bit and give the alts time to play ball. Just a idea. Going to the daily, we're seeing this volume increase and it's still thick, so you could still see a bounce here on that idea. I'm going to remove this retrace thing really quick, or just switch it to pocket actually. Just leave it the pocket region. And what are we going to do? We're going to take this trend base fib from here to here, down to here. Okay, so we're currently at the 1382. This golden pocket of this bullish trend base fib extension tool from this daily time frame impulse up, retrace down, and we basically went up into those take profit regions for the dominance based off of this January to January 24th and retraced down to February 9th idea. This gave you a projected zone, so we're in the take profit regions of that. So the people that entered here and re-entered there are looking to take profits in this region, which is causing this to bounce out here. So are we going to see a resurge up to the 1618? I have no idea, but ideally if you break down out of this region, you would come down into these regions here, down to the 0.65 and below. The 4-hour time frame, just like BTC, is suggesting you see some bounce of some kind. Let's go to the 22 and see if that coincides with that idea. We can remove that green box. You're still seeing a little bit more. This is interesting. So the 22 reset on here, well, it hasn't reset yet on BTC, but you're still seeing this opening up in a furious way to the downside for the Williams. And you're reaching the outskirts would be right around here too, so even if you came down with the fury, it wouldn't be like immediately down to here, so you'd see something like and then kind of play around here, then some more frugal ideas in the interim. Let's go to the 12-hour. Getting 6 time frames overbought on dominance, or oversold rather, reaching the outskirts of that Keltner channel idea. When you break above it, do it sometimes with the fury and come back and retest and find support off of it. For the most part, when you're range trading, you can range trade between the Keltner channels, but when you're seeing this furious nature above and below, it does snap below it sometimes and come back to it. Okay, so the dominance is dropping, which suggests that the alts are playing ball if BTC goes sideways. So the alt game is on if BTC is sideways and the dominance drops. So the dominance dropping is good for alts right now. And the 6-hour and the MACD, the Williams on the MACD and everything is good for a dominance bounce right now. But the dominance could also mean if it bounces, it means people get knocked out of trades, right? If you juxtapose that with USTD dominance. So we could do that too real quick and see if the dominance for the USDT is indicating the 6 hours overbought, suggesting it dumps, which means people enter more USDT into trades as opposed to get knocked back into USDT. Let me just erase everything here. So you're kind of at the bottom, double bottom idea of USTD dominance. So this is kind of weird. So you got like, you know, basically a W formation for USTD dominance forming on the 12-hour time frame. I mean, that technically would be on daily too, I think. And the daily is oversold. suggesting that you could get some sort of knock people out event into USDT for that double bottom potential. You know, this is a shoulder head and a shoulder that could break down some more though, which means more people enter the USDT into trades. So that's just one idea. But the Williams is low, the daily is low on that 3-day, and the weekly is low for USDT dominance, which suggests people get out of into USDT, which causes it to rise, if I'm not mistaken. Getting some meandering around and indecision on the 4-hour time frame, just like BTC is, for the potential bounce for BTC and the potential. So going back to the dominance really quick. Okay, so the money flow is above the RSI here on the 4-hour time frame. When the money flow gets above the RSI, what is the money flow index? This is the MFI here. I put it in gray because I consider it to be the subconscious of the RSI. When it gets above the RSI, very rarely does the RSI get gravitated up to it. Normally it gets gravitated down to the RSI. And conversely, if the money flow is beneath the RSI, it tends to go up to the RSI. Similar to here, you had bullish divergence and it goes up to the RSI. The money flow index is also better known as the volume weighted RSI. So when you see these overlaid with one another, it gives you an idea about where the money flow is overvalued or undervalued for coming in. So if you see this coming in as the RSI goes down, it suggests money is struggling and could come down to meet the RSI in turn. You are getting suppressed here on the 4-hour too, due to the Williams and the MACD, leading MACD coming down to meet the Williams. When the Williams and the MACD do come down to meet each other, that is kind of interesting to note. That's kind of when you think about it jumping actually. And if you look at the baseline cross event here, we are seeing that crossover event get confirmed here, and we are on the adaptive moving average right now currently. So the 4-hour time frame does suggest that the dominance should bounce if you just ignore everything else out of that. And it's similar to Bitcoin, where the 4-hour seems to suggest that. But if you look at the hourly time frame, here's where you're going to see that hourly trying to dump on you. You're seeing all these previous rising sun failures, as that suppression from the Williams on the higher time frames is causing this meandering to occur. You're getting something similar to last week in terms of these sixes, suggesting that you could see an upside move for dominance. A little bit of indecision on the lower time frames when juxtaposed to the higher. Just based off of this alone, if you just go off this is what we were seeing last Sunday when BTC jumped on BTC. So I don't know, just look, without removing my opinion and just looking at the stochastic array, which is a formula that monitors over 32 different indicator values and determines exhaustion based off those time frames. It's saying that there's 6 and 5 time frames exhausted to favor a bounce on the dominance. So you just watch how the 15 and the hourly react, and based off of that will give you an idea of that bounce to the dominance, if that's what you're looking for. It is holding that fib level quite nicely on that 4723 region from that daily time frame rise retrace idea. So the 12-hour candle close and the in 7 hours, as well as the 22 and how that reacts. Basically the weekly candle close will give you some ideas. I'm not really sure how to gauge it at this point. I think the basic gist of the liquidity we were looking at for BTC has that story in mind. How does that affect the alts? The alts have been on a state of high alert since basically last year, so they run in tandem with BTC regardless. So we're seeing this 12-hour possibility. So the Williams I'd like to see come down more on the 12-hour. That's what I want to see. When this comes down into this green region, then you could see that potential bounce. Coming down into the 786 would be the play to see that bounce come up. I'm gonna just say make that call down to here, like seeing it into this regions, to hit the 12-hour adaptive of some type off the 6.5 of that bullish trend-based fib, then maybe you could see some sort of juiciness occur. I'm going to ignore the 4-hour for myself personally because of the 22 and above, but that 4-hour does, this is what you like to see on a lot of time frames if you're looking for that long spice. This is a leading MACD formula that traverses both domains, and they say what's up to the Williams. It's kind of a good sign for a long, but they can do that sometimes here at the stochastic RSI. I hope that sufficed. It was not the cleanest of analysis, but not as clean as BTC. But we'll add that to the mix. I think that's a good idea. The USDT and Bitcoin dominance. The USDT dominance idea of the double bottom suggests that people get kicked out into USDT or consider getting their profits put into USDT, whatever the case may be. So that suggests that, unless this breaks down out of that on the 4-hour dump here, because it's basically the 4-hour is in opposition to a lot of the higher time frames. So you're getting that kind of ambiguity on both ends for everything right now. It's the 4-hour versus the other time frames. All right, let's play ourselves out here.
I'm tired, but I'm wide awake. In darkness, I can see your face.
Oh yeah.
When you're with me, there's no
So if you just go off of the cross down events for BTC alone, then that kind of gives you the clue and the liquidity down below that we've been talking about for days that's gotten lost in the father time idea. So for me personally, I'm still looking for a retrace down into the nether regions of the golden pocket retrace zone, and then maybe think about longing at that time. We've seen a nice move to the upside. A retrace is not a bad idea. You got shoulder, head, and possible shoulder to the downside. It does take time to develop, so you could see a drop with a little bit of rise before you come down. May not be just immediate. So what to look at for the 12-hour and the 22. Basically seeing the 12-hour also give that cross, getting that very close to that cross based off of how it closes in 5 hours 28 minutes will give you the clue that cloud coincides with our region and it's coming down. The Williams has yet to cross and give the alarm. That's where you will see it come to fruition, in my humble opinion. Alright guys, well I thank you for your time and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and I will catch you guys on the flip. Peace.